afternoon, everybody. I'm glad you had a chance to join us this afternoon. For those of you that will be watching this as a recording, I appreciate you tuning in. My name is Chad Moody. I'm an attorney here at Hansen St. I practice in various areas related to finance and business-related litigation and transaction matters. I'm also a member of the bankruptcy team. The Idaho State Bar requires us to give a little disclaimer when we do these types of classes. These classes are intended for general purposes only. We're not giving any legal advice. You shouldn't rely on any legal advice. For any specific questions and specific facts to you, we would encourage you to seek out an attorney. You can call and make an appointment with us, and we can talk about your specific situation. This does not create an attorney-client relationship by reviewing this video. Again, this is just for general information only. This class is about agriculture-related items during this COVID-19 crisis. We've been doing a series of classes and videos trying to educate small businesses and individuals of how to negotiate these trying times. In many aspects and ways, these are without precedent, and Hansen Johnson and its attorneys are trying to provide a service to the community to advise them as to various legal aspects that are implicated by the COVID-19 crisis. These classes have been uploaded to our social media pages on YouTube, and we'll have links to them on our webpage. Our past classes have included issues such as landlord-tenant law, taxation, family planning, estate planning. As a parallel to the topics we'll be talking about today, we've done a series of employment issues and small business classes, really trying to raise awareness of what is in a lot of these federal programs out there. And we would encourage you to use this class in conjunction with those, as it might be applicable to you. Today, I'm focused on the COVID-19 crisis and some of the responses in the agricultural industry and what we're doing about it. I'm going to cover a little bit of what's in the news. For some of you, this is not going to be news. This is something that's a reality for you. And we hope that we can give you a little bit of information and context, not only for you, but for others, about how this issue is affecting the industry as a whole. I'm going to do a brief overview of some of the federal programs, concentrating mostly on what the USDA is putting out there. We have other classes dealing with what the SBA, the Small Business Administration programs are. We just don't have enough time to go through and all the details under both programs, but as this is an ag-focused presentation, we'll focus on some of the key news coming out of the USDA. I'll also go over a little bit of what we're seeing in the news, what might be changing on some of these programs, what we might be expecting down the road. And I'm going to wrap up with a little bit of information about recommendations and possible other options, such as a Chapter 12 bankruptcy, and walk through a little bit of that structure. With that, it's not a surprise for many of you in the ag industry that we're in an unprecedented situation where we're suffering from labor issues, financial hardships, and regulatory uncertainty as the federal government attempts to respond in the COVID-19 crisis. We've seen this play out in the media, especially in recent weeks. Certainly no agricultural commodity hasn't been affected, but certainly there are commodities, especially those in the fresh pack industry, cattle, pork, and other special crop products that are being impacted now just because of the reduction in demand from the virtual complete closure of most of the restaurants and the food services out there. Because of that, we've seen a shift in the consumer consumption patterns, and those have changed. Primarily, people are buying more from the grocery store. A recent article in the Capital Press records that Idaho grocery stores are reporting sales of upwards of 50%. Well, I'm guessing we would see even more significant decreases in the restaurant sector, but those numbers aren't available yet. However, with the shutdown, it's not going to be news. Consequently, it's axiomatic that in 2020 we're with the market stressors, we're anticipating that farm income is going to be lower, but as ag professionals, you're still going to be out there. The crops have to be grown, they have to be harvested, the animals have to be milked, and you're on a production cycle, and you're still going to be incurring those fixed costs but the gross revenue numbers and the income numbers are fluctuating because of the increased demand. Right now, the supply chain seems to be solidified. However, recent news coming out of the industry, specifically related to dairy and the slaughterhouses with beef and pork, we're hearing that there may be a slowdown. In the news, we're seeing that processing facilities, at least 18 nationwide, have had to shut down. Others are being slowed. Their throughput of the product is slowing down because of labor issues, also because of the social distancing requirements to keep those places open. A lot of these processing plants are shoulder to shoulder, arm to arm production facilities, and with the social distancing requirements, we're going to see things having to slow down, processing plants having to retool, and that's just going to slow the ability to process. And what we're seeing is an oversupply that's backing up behind those processors. Also, from a crop perspective, we're seeing issues with the lack of demand by restaurants and the food services, that all the storehouses are full, the processing plants are full, and there's no place to take the product. And so we've seen news recently right here in Idaho where thousands of tons of potatoes are having to be dumped. We're hearing about dairy and milk being dumped, and it's heartbreaking for a farmer who's providing those services. A lot of this is related, hopefully, is a temporary oversupply. And as here in Idaho, we start to get back to work and we can start seeing those restaurants open up, it appears that there will be supply there to fulfill that demand if and when we get that ramped back up. Certainly, on a national level, we're seeing issues with slaughterhouses where capacity to process pork and beef is down 20% and 10% respectively, according to some reports. Coming out of the USDA, slaughter numbers are down 32 to 35% since March, and 27% off of last year's numbers. And so we're seeing a real crimp in that processing capacity, and in large part it has to do with demand. Also, we're seeing that there's a labor shortage issues with outbreaks at some of these facilities, which just makes it hard for them to continue. But that's not constrained just to processing plants. I've talked to crop farmers here in Idaho where there is a significant shortage of labor. In part, that's part of the border policies that have been enacted. A lot of seasonal work comes from out of countries. There's a lot of confusion with the H-2A program. That program seems to be going through some changes, trying to respond to this labor issue. They are operating under a temporary rule. It's a little bit beyond the topic of today's presentation, but know that they are trying to reduce that rules, but there's still a lot of confusion as to the H-2A program. And then more just commonsensically, there's a very robust unemployment payments that are being pushed out currently. And it's been seemingly beefed up with the corona kind of an added amount. And in some cases, you have people able to claim unemployment getting paid more than what they were when they're at work. For farmers, obviously, this is a concern. There's a question whether, even though we have a high unemployment rate, there hasn't that decrease in labor, the available labor hasn't been rectified, at least according to some initial reports. In Idaho, one report from the industry reflected that we're down about 20% for labor. And then finally, there's issues and some confusion about how the SBA is servicing or issuing guidance about how some of the federal loans that have been approved. You've probably heard about the Paycheck Protection Program or the PPP loans. Early on, there were some questions about whether or not ag families and farmers could take advantage of those loans. And so in addressing that, there's also issues of whether or not the rural counties and the rural lenders had access to those loans, and if we're getting those out to the people who need them in the ag community. One report I saw reported that less than 2% of all available PPP loans reached the ag industry. And I know that the industry organizations are hoping to rectify that. I want to quickly go through some of the USDA programs that are out there and some of the news coming out of the department that would be relevant to you. But quickly, there's new news coming out of Idaho. There is Governor Little announced an initiative where he'll be distributing approximately $300 million here in Idaho and issuing $10,000 loans. There hasn't been any guidance offered other than to say that $10,000 loan will not be available if you've already been able to take advantage of the federal PPP loan. Please stay tuned as we get more guidance coming out of the governor's office. Turning now to probably a new act coming out of the USDA, a new program that you've likely heard about. It's all over the ag industry news, is the Coronavirus Food Assistance Program, or the CFAP. That was initially announced on April 17th by the Secretary of Agriculture. And the background and what came out of this is it was born out of the CARES Act, and there was an authorization for direct payments to ag entities who have been negatively impacted by the coronavirus. There was a significant evaluation and study of commodity-specific losses during the January to April timeframes. There's a near-term adjustment that they're looking at, that they were evaluating, forecasting the disparate impact that this temporary oversupply will have on the demand for products going for the next 2 quarters. And in response, the USDA has announced the CFAP to administer the relief that Congress authorized. It's planned to be one of several different programs that the USDA is going to roll out, but this is probably the most robust, immediate term one that is designed to get direct assistance to the ag community. While the CARES Act does contemplate direct payments to the ag industry, there hasn't been any specific guidance provided by the USDA yet indicating how they plan to target the ag industry and get those funds where they're needed most. But in the absence of that information, there's been a lot of industry input and communication with the department. And up till now, even though we don't have a formal document that has indicated the final details that the department is going to put out for emergency rulemaking, we've been able to get a lot of information about what's being contemplated, and I'm going to go through some of that. But it's interesting to note that a lot of this information is derived from the USDA itself through their press releases, statements by the secretary, a huge help coming from the industry organizations in their conversations with the USDA directly and reporting out to the industry. And then finally, there's been some recent feedback from the senators who have issued letters asking the USDA to clarify certain terms and objecting to some of the proposed terms that we'll get into. There's 2 real major elements to the CFAP. I'm going to look at part 2 because most of the information I want to cover is on part 1. Part 2 of the CFAP deals with the USDA's purchase and distribution of commodities and crops from producers. There's $3 billion allocated for this purpose. And the aim is that the USDA will partner with regional and local distributors whose workforce has been significantly affected by the closure of the restaurants, hotels, food services. And it's really going to be targeted at buying fresh agricultural products, namely produce, dairy, and various meat products. The planned procurement is about $100 million from each one of those industries per month. And the hope is to procure those items from producers, get them to the distributors who will create boxed food packages that will then be distributed by various entities, nonprofits, religious groups, etc., to get the aid to struggling families who, as has been all over the news, are struggling as well, especially for those on furlough or currently unemployed. What I want to focus on is really the part one, and that's the direct support that's authorized under the CFAP. There's $16 billion allocated for this purpose. It's made up of $9.5 billion that was authorized by the CARES Act, and there's another $6.5 billion from the Credit Commodity Corporation, which is an entity that operates under the USDA. Simply, this direct support provides $16 billion in direct support based on actual losses for producers where the prices and the market supply chains have been impacted due to lost demand, oversupply because of the loss of the restaurants and the food service entities, and it's going to cover the 2020 marketing year that's been adversely impacted by the COVID crisis. The reports indicate that the funds will be split between the varying groups. Approximately $5.1 billion will be allocated for cattle, $2.9 billion for dairy, and $1.6 billion for hogs. There's additional set-asides for row crops, specialty crops, and other types of specialty crops that they'll better define once we actually have a rule established by the USDA. Where one report indicates that those are not set in stone, that depending on demand, the department will be able to move cash around between those categories. So some of the details that are worth noting that are being reported is, first, to qualify for this direct support for this market loss, is the commodity must have declined at least 5% between January and April 2020. There's several different entities, as you know, that have pricing models and that report on what the declines are. There hasn't been any indication of what price series the USDA will use to make a determination of what commodity qualifies for the CFAP relief. The calculation is focused on actual losses and projected pressure that's on the market over the next 2 quarters. So it's a two-part calculation to get to the payment. The first calculation, producers will be compensated for 85% of the price loss suffered during the period between January 1st and April 15th. So that's looking back. Again, there's no guidance as to what pricing scale they're going to be looking at, but generally speaking, that loss assistance will be the 85% of what you actually lose. The second part of the calculation is producers are anticipated to be compensated for 30% of expected losses incurred for the next 2 quarters. That's going to be following, they believe the target date will be around April 15th. That may change, but from that point forward, there'll be a calculation based on the 30% of those expected losses for the following 2 quarters. Somewhat controversial is the implementation and discussion of putting payment limits on each claim. Currently, under the USDA's direction, that limit is set at $125,000 per commodity, with an overall limit of $250,000 per individual. There's some question as to whether the individual means solely a husband or their spouse. If it's a family operation and they can double up, that hasn't been ironed out, but it's certainly something to be looking out for. And I think Congress has had some things to say about this, and so I anticipate some changes coming down the road. The CFAP initially was thought that maybe your eligibility or the amount you could be paid under the program would be adjusted depending on if you're taking advantage of other safety net programs. More recent reports, specifically from the American Farm Bureau Federation, who was on the phone with officials from the USDA, have come out and reported that no, those programs, specifically programs like the agricultural risk coverage, price loss coverage, dairy margin coverage, are complementary to the CFAP and will not lower a recipient's potential payout under the program. There may be some limitations as to what gets paid out. If you're dumping milk, the entire value is not likely to be paid. It's most likely going to be the 85% of the loss that you would have suffered under the first calculation. There's also some questions over whether or not the funds will be used to pay depopulated livestock that unfortunately producers had to put down. And then also for contract animals, this is targeting the owners of the CFAP funds are intended to cover producers who own the commodity or product. So there's a question as to whether or not contract growers would be able to participate. Those payments are expected to roll out near the end of May, beginning of June. The USDA intends to use an emergency rulemaking process to make that so. The application process is still in the works, but it looks like it's, depending on what type of producer you are, it's either going to be facilitated through the Farm Service Agency or the Agriculture Marketing Service Program. Recently, congressional leaders have signed a letter to the USDA indicating they have real concerns about the payment limits that are being imposed, arguing that it doesn't take into account the unique circumstances for each commodity and the time where they started incurring the pressure. Obviously, across the city, the country, we've seen a rolling impact over time of the negative impact of the coronavirus. And so what farms and producers have been negatively impacted at different times. And so they're challenging the USDA's what they call a one-size-fits-all or a generic program. So keep your eye out for potential changes when the guidance is actually issued by the department. It makes sense, however, that there is a limit because the amount of assistance been authorized is $19 billion. And according to the secretary in a recent interview, he stated in response to these concerns over these pricing limits that he only has a finite pool of money, and it's hard to spread it around unless you have some kind of a cap. There's rumors that there's new bills that have been introduced to try to get additional relief for the ag community. I've seen reports of a $50 billion bill that will require that there not be a cap other than that relief for particular producers that qualify shouldn't exceed what their actual damages are. There's other concerns about how this is getting pushed out to the rural parts of the country and how the department is going to cater to the local producers and their unique situations. I understand that the USDA is still working on what the final terms are going to be. The industry organizations have been reaching out, so stay tuned for the formal proposal and the plan details. We'll probably do a follow-up video to go through some of those changes. Really quickly, I want to touch base on two other USDA announcements that you may be affected by. The first one deals with the marketing assistance loans. Quickly, the MALs provide producers with interim financing to meet immediate cash flow needs without having to sell commodities when the market prices are low, and allows the producers to store the commodities and market them more orderly to take advantage of higher prices throughout the year. These are loans. They're considered non-recourse because the commodity is pledged as collateral, and the producers have the option of delivering that collateral to the Commodity Credit Corporation as a repayment. The key point here is traditionally these MALs have a 9-month maturity, and the recent news coming out of the USDA is that they have now extended that to 12 months so that producers have more time to market the commodities to maximize price. This applies to non-recourse loans for crop years 2018, 2019, and 2020. There are some eligibility requirements. Loans have to be in good standing with a maturity date of at least March 31st, 2020. or have a new crop year loan requested between then and September 30th, 2020. For all new loans, it's automatically going to have the 12-month maturity adjustment. For loans that are requested after September 30th, 2020, the expiration date, at least at this time, will revert back to a 9-month maturity date. For current active loans, those have been automatically extended by the department. So loans that matured on March 31st automatically were extended by the Farm Service Agency. This is applied to a number of commodities here in Idaho. It would apply to barley, corn, grain, soybeans, oats, wheats, and a number of other things. So if this is something that you can benefit from, certainly take advantage of it. Consult your USDA regional office about those details. The other important thing about USDA loans and programs that will be of immediate help to those in the ag industry are permissive deferrals that the USDA is authorizing its lenders, its qualified lenders that service USDA guaranteed loans. They're allowing the lenders without agency approval to offer deferred payments of 180 days from the original loan payment date. There is an eligibility requirement. You have to have a current repayment status as of January 31st, 2020. Now, this is big news for those of you that are taking advantage of those USDA loans. If you're struggling, get a hold of your lender, take advantage of a potential deferment. Now, the lender has to use it has to act in a fiduciary for the USDA, act in a reasonable way, but it's good to know that the agency is giving them the authority to work with producers that have these loans to give them some immediate relief for this 180 days. For those of you that do have, for the eligibility requirement, you do have to have a current repayment, again, from January 31st. However, the agency will not consider those of you that are already under a deferred payment or under a forbearance agreement. Those are not considered delinquent loans and may be able to qualify for this additional deferment. This will be effective March 31st, 2020 through September 30th, 2020. Other particular programs you should look into are is the normal programs the USDA offers. They're trying to streamline and relax the loan making process and add flexibilities to those loans. Those may include the Farm Service Agency loans, microloans, and the USDA rural development loans and grants. If you're struggling, there's those additional resources for you. Another thing I want to note, but I can't spend a lot of time on today, is I focus principally on the USDA programs. There is the SBA programs out there as well. We've done, my partner here at the firm, Matt Christensen, has done a series of classes detailing the SBA loans, principally the Payback Protection Program, the Economic Injury Disaster Loan, or the EIDL program, and then more recently, these Express Bridge loans that the Fed will be issuing through the SBA. Recent guidance from the, as of April 24th, there was specific language included under the PPP loan when they reauthorized additional funds, making it crystal clear that ag producers and farms qualify to take advantage of these PPP loans. You all should be taking advantage of this. Make sure that you look at our other classes to get what the requirements are, the eligibility, and how to take advantage of these to their fullest extent. There's rumors that, not rumors, but as I mentioned before, we're waiting, as far as news of the upcoming events, we're waiting for the specific plan for the CFAP. We'll be watching for how the department responds to these price limits that the Congress and multiple senators have been raising concerns over, and that includes the Idaho delegation. They're concerned about these pricing limits because at 125,000, there is a lot of producers out there that it's not, there's worries that it's just not going to be effective against these huge operations. For the smaller operations, certainly this could be meaningful, and certainly up to $250,000 for any operation is not a small chunk of change. But in the grand scheme of things and the pain that's being suffered due to this crisis, there's real concern whether or not this amount and this payment cap is really going to get the type of relief to soften the blow that the industry is suffering. Finally, one other thing I wanted to talk about is if these programs aren't enough, and we need to take a look at taking some other drastic steps. I want you to know that there are a number of bankruptcy options out there that are not liquidation. They're not throwing in the towel, but they're reorganizing your operations. Because this is an ag industry focused class, I want to highlight just a few points about Chapter 12 of why you should be looking at potentially consulting an attorney or your tax advisor about how this might benefit you if you're not eligible for programs, or the burden of it's just creating too much pressure on your day-to-day operation. Again, Matt Christensen, a partner here at the firm, he recently taught a very detailed class explaining the differences between the bankruptcy chapters and how those work. I would encourage you to watch that. I'm going to piggyback on that and not rehash those details and focus on the ag-based reorganization, Chapter 12 bankruptcy program. I just want to quickly touch on some of the benefits of those and encourage you that if you're struggling financially or starting to feel that pressure of being able to meet the bills, and that you take a look and at least get educated on how this program might work for you. But some of the benefits are the imposition of an automatic stay upon filing. For most debt, it immediately ceases and automatically ceases. For most collection actions, it halts those. In a Chapter 12, and this is unique to only a couple of the chapters out there, but under Chapter 12, there's a special automatic stay provision that protects the co-debtors. So if you're a farmer and you operate under a corporation and you qualify for a Chapter 12 and you have personal guarantees, then creditors may not seek collateral, may not collect against the personal, family, or household debts from you as an individual if you're liable along with the debtor. You can also, under Chapter 12, this is a reorganization. Again, this is not a liquidation. You're still in business, so you're able to operate. You're able to sell and lease your property in the normal course of business. And even if it's not in the normal course of business, we can get permission for you to take the necessary steps related to get out of leases or restructure leases to help benefit your operation. Chapter 12 eliminates many of the barriers and the burdens that debtors under other chapters face by streamlining the process. It's less complicated than other chapters, and it's less expensive than other reorganization chapters that you might qualify for, such as a Chapter 11. Another benefit is debtors can change terms in some cases for secured debts. So you may be able to force a mortgage company to lower its interest, maybe pay back a reduced amount of principal as a cram down, basically restructuring the loan to repay only what the market value is if it happens to be lower than what the obligation, what the value is for the loan. And you may even be able to extend the term of the loan to make it more beneficial and workable for you going forward.
part of the Chapter 12 is coming up with a repayment plan, and those plans are developed by you. And there's flexible payment arrangements to recognize the reality for the ag industry that you don't always have monthly equal payments that you can make under a plan. There's flexible arrangements to coincide with harvest and those times where you're actually bringing in income. And those plans usually range for 3 to 5 years. There's certain requirements for what has to be paid under a plan, but for general unsecured debts, it may be that a plan is only pays part of those debts. And that's advantageous to you. So if you make all your plan payments and you've met the various requirements and you've certified that those priority payments have been made, then at the end, if there is compliance, you can discharge your those obligations to those unsecured debts going forward. After the 3 and sometimes the 5-year period. So that's really advantageous for when you've just got a lot of pressure and you need some relief, and if you can have some adjustments to those loans, that's going to be a real benefit to you. Now there's some qualifications, and I'm just going to go through a couple of them depending on if you're an individual or a corporation, but there are some specific qualifications for those. But generally, you have to be engaged in farming operations to take advantage of a Chapter 12. You have to have regular annual income. Your total debts cannot exceed $10 million, which is actually an increase. Recently, that was approximately 4.1. If you had over that, you didn't qualify, but last year, Congress increased that amount to 10 million, which provides a tremendous relief for a lot of farming operations out there. At least 50% of your total debts have to come from the farming operation. And for individuals, and again, corporations are going to have a little bit different criteria, but generally speaking, 50% of your gross income has to come from farming operations as well. There's a lot of different structure issues, how there is a Chapter 12 trustee is appointed to monitor the case, to receive the monthly payments, to distribute those pursuant to the plan to the creditors, and to help get a plan confirmed. He is an independent observer and reports to the bankruptcy court as the progress of your Chapter 12 moves forward. Now, finally, just to kind of wrap up, to give some best practices and some recommendations, we encourage you stay informed as to the new programs. Things are changing weekly and sometimes day by day. Specifically for the ag industry, be watching out for these new announcements coming out of the USDA, specifically for the Coronavirus Food Assistance Program. Look out for those details to take advantage of the direct support. Make sure you get those applications in if you qualify. Once we get the rules in place, like I mentioned, we may do a follow-up class to iron out what those details are to provide that service for you. Keep an eye out for what the SBA is doing and the continued guidance that's going to be coming out for the SBA to get payments to the ag community. I encourage you to watch our other classes that dealt with the SBA in more detail. Obviously, I didn't get into that here just because there's too much detail in one class with those programs, and we have covered those in other classes. We encourage you, a lot of these programs, whether it's SBA or USDA, there's going to be a tremendous amount of self-certification of what your losses are, what your payroll expenses are, what your income is. So you need to take really detailed records. And if you're taking advantage of, say, the PPP loan, we encourage you to segregate those counts in a separate bank account. Segregate those funds in a separate bank account so that it makes it easier for you to account. But having accurate record keeping is going to be critical for you to self-certify to take advantage of these programs, specifically the CFAP, because you're going to have to document what losses that you've had in order to qualify for those payments. You need to communicate with your lenders. Don't hide. There's a lot of guidance going out to these lenders that have these USDA-backed loans where they're giving them the authority to defer payments. And lenders don't want to come and recoup collateral. And in this environment, there's a lot of distressed loans out there, and they don't want bad loans on the books. So lenders are incentivized, and in this climate are willing to work with debtors. The key is communication. If you're not communicating, the lender doesn't have a lot of options. But if you're communicating, we're seeing where lenders are incredibly willing to defer payments, restructure interest, extend maturity dates, and they will work with you. You need to be talking to your tax advisors and your financial advisors and your attorneys to look at what the potential options there are for you if you're in stress. And I give credit to, again, Matt Christensen. He's fond of saying that although bankruptcy may be your last resort, because you're worried about the stigma or the concerns about being in a bankruptcy and using that tool to your advantage, first we would say that's a mistake, because the protections it affords you, and it allows you to keep your business afloat versus having to wait until you're underwater far enough to where there's really no chance, really no options for you but to liquidate. Matt is fond of saying that it's okay for this to be the bankruptcy to be a last resort, but don't wait till the last minute. That's a common mistake. The sooner you can get in, when you start feeling the pressure, start talking to your advisors, start learning about how bankruptcy might benefit you, and see if that's an option to take advantage of. If you wait too long, those options sometimes can shrink. Finally, it's a good time in this virus. It's a good time to take stock of your operations and to be productive in your planning. Consider working with your lenders, your programs, taking advantage of those. Recognize that your entity may have changed and you need to formalize an agreement. You've brought on new partners have left. Reevaluate those legal documents, get those up to date. And finally, if you're in land transactions, purchase transactions, you're looking to sell, seek out real estate attorneys to help you with those as well. Finally, I appreciate you tuning in. I would encourage you to take a look at our other classes for additional information that may help you. I've referred to some of those throughout this class. If you have any questions about how to access these classes and to sign up for future classes, please take a look at our website and our social media pages. Or if you would like to contact somebody in our office, please contact Kyla at Angstman.com. That's Kyla at Angstman.com. I appreciate all of you tuning in today, and I hope this was of help. Please give us a call if we can be of any specific assistance to you. God bless and be well.